Please welcome the Chairman of the Board of Peace, the President of the United States of America, Donald J. Trump.
Board for Peace inked at Davos. Peace plan or power move? War looms over Davos talks. Zelensky blasts European Union. Zelensky accuses EU of lacking political will.
Many meetings have taken place, but still Europe hasn't reached even the point. What's missing? Time or political will?
What is the Trumpian world order?
While geopolitics has dominated the discourse, in particular because of what President Trump is doing or perhaps won't do, the impact of that is clearly being felt on geoeconomics as well. And the Trumpian world order has caused considerable disruption and a lack of certainty as to what lies ahead. To try and make sense of that, as to what lies ahead for the economic order, I'm joined by a very special guest, Professor Geeta Gopinath, Professor of Economics now at Harvard University, former Deputy Managing Director at IMF. Always good to have you, Geeta, on the show. Thank you very much.
Likewise, Rajdeep.
We're speaking at a time of great uncertainty, and it seems to be sooner or later affecting economies across the world. Even as we speak, the rupee has gone to its lowest against the dollar. We had a 1,000-point plus drop in the markets yesterday. Are you getting a sense that 2026 is going to be a year of uncertainty when it comes to economies across the world, including India?
It is going to be high levels of uncertainty and it's going to be high levels of volatility. So we will see markets drop, we will see them come back up, we will see currencies move, probably more than what we saw in 2025. Now, I was of the view that we were past peak tariffs in 2025 coming into 2026 because one, there's the Supreme Court decision that has to come out, and there are the midterm elections where frankly tariffs are raising inflation in the US and it's leading to an affordability problem, and that is consequential for elections. But the year has started out in a perplexing way, which is with the whole Greenland piece and a rupture of relations between the US and the European Union, which was not something that was on the cards last year.
Because the IMF, for example, has projected for India itself, what? 7.3% for 25, 26, and perhaps slowing down a bit into 26, 27, 6.4, 6.3. Do any of those projections hold in this Trumpian world order? Should we be looking at them in the first instance?
Again, it is a good, useful indicator. I have to say that 2025 played out about what was projected for the world. You know, it was, I think they predicted 3.2 and it ended up 3.3, slightly better, but the ballpark was really good. So it is a useful number to keep in mind. But that said, we are certainly, playing the roulette rule quite a bit these days and hoping for the global economy to all hang together.
Because you wrote an interesting article recently in the Financial Times. You argue that 2025 created an illusion of stability with global growth holding up despite tariffs, policy chaos and rising uncertainty. Do you seem to believe, when you say it's created an illusion of stability, do you believe that illusion will hold, or sooner or later ruptures will be seen in economies across the world?
Well, I think one of two things are likely. One is, at the minimum, I expect that there will be a slow hit to living standards over time, because structural changes of the kind that we're seeing, you don't see it showing up immediately in GDP numbers. It weakens the economic potential slowly and then it adds up over time. That's why I gave the example of Brexit in that article, which is in the 2 years after Brexit, investment in the UK went up and everybody said, oh well, this is much ado about nothing. But actually that was not the case. In fact, investment started slowing and really slowed relative to what it would have been in the absence of Brexit. also the other thing I want to keep in mind is that while tariffs were a headwind, you had a good tailwind that came from AI. And that played a very important role. You know, the investment boom in AI, the stock market-driven wealth increases in AI, all of those helped growth. The fiscal stimulus, the fiscal spending that happened in China, Germany, some in the US, more happening this year in the US, all of that is offsetting it. So I'd like to push back on this basic sense that somehow tariffs haven't done much. They've actually played out the way you would expect, keeping in mind that the average tariff rate is lower than what the sticker shock numbers are.
So you're saying these are times to be cautious, in a sense, because there's a belief that India, for example, I go back to India again, that India in a way has shown itself to be a bit of an outlier, still the fastest growing large economy in the world, and that therefore with our domestic demand being what it is, we will do reasonably well even with these global headwinds. Do you go along with that, or is there a sense, as many businessmen privately tell me, privately not publicly, privately tell me these are uncertain times and they are very worried?
So in terms of estimates of what the tariffs will do for India is about, it will knock off something about 0.7 percentage points from growth over a 2-year period. I think nobody in India should think that, well, what you've seen is a lot of exports from India that were previously going to the US were redirected to other markets, including the Middle East, other countries. Similarly, China redirected a bunch of flows that were trade that was going to the US to other countries in Asia, in Europe, and some of it, of course, has found a way back into the US, which is what happens. This is not a sustainable situation. I don't think there is, we will all very simply easily pivot away from the US and sell to other markets, and therefore we don't need to worry about the consequences. The US is a large market. It does matter if you have very high levels of tariffs with the US. Whether, how this gets solved is going to come down to the two heads of state, President Trump and Prime Minister Modi, a discussion and a decision at that level.
But you've also, and you alluded to it briefly, that there are signs that the US economy also could well be slowing down. Jobs could get scarce in the months ahead. Inflation, which you mentioned, could become a serious worry. Given all of that, does that add another factor in a way? Will that be a restraint at all in your view on what Donald Trump does or not? Can we separate the geopolitics from the geoeconomics at all anymore?
So the restraints that we have seen have come when there have been very big dramatic decisions like April 2nd, Liberation Day tariffs. Then we saw financial markets respond very strongly. Between April 2nd and April 5th, when they went and put a pause on those tariffs, really something could have broken in the markets. So markets are not a good disciplining device for slow erosion. They're good for when there are big shifts that you see. And indeed, if there is a huge decoupling of many more countries with the US, or the attempt to decouple, which I don't think is easy to do, but the attempt to decouple with the US, that will have big financial market implications.
A couple of other points that you've been making in recent comments and articles. One is your warning on AI, that it's not about its transformative potential, but you suggest that profitability and a risk of a dot-com style correction. Now, everyone here in Davos is talking about what the AI boom is doing. You seem to again be giving a slightly cautionary tale there.
I am very positive on the technology itself. And so I expect that this technology will raise productivity growth. It will raise growth in general. It's the most transformative technological change of our lifetimes, and maybe more than our lifetimes too. That is separate from valuations of companies, both those listed on the market and those not listed on the market yet, like OpenAI and Anthropic and others. It's hard for me to see how each of these companies can make the kinds of profits that are needed to justify the level of investment spending that they're doing, the level of valuations that they have. They haven't presented, most of them don't really have a big profit-making model. There is so much competition. Every day there's a new LLM that's coming and leapfrogging the other one, not just from within the US, but from international sources. I don't know about you. I'm going across LLMs. I go across very many different versions of those. So it seems like a fairly competitive space at this time. So that's just my point. My point is that it's a technology that's real. It's not a fake technology. I think it will have a big impact. But at the same time, it strikes me that these valuations are somewhat more fragile.
On China, you argue that the continued reliance on export-led growth is untenable in a way, and that prioritizing technology investment over social safety net risks deepening structural imbalances. I mean, are we seeing China? There are those who argue that what Trump is doing is actually not making the US great again, but making China great again. That in a way, this is China's moment as a result because of the disruption being created even as we speak between the US and Europe. Do you go along with that, or do you believe that China itself will also have to reboot?
I think both are true, which is that China needs to reboot. Again, China was one of the countries that in 2025 redirected its trade away from the US to Europe and the rest of Asia. That is not going to hold in the long run because Europe is going to put tariffs on China, and they will be justified in doing that by WTO rules, the anti-dumping tariffs that you can put. So we will see that play out. China cannot rely on export-driven growth. It needs to rely on domestic consumption-driven growth. Unfortunately, at least by going by their 15th five-year plan and so on, I don't see a big necessary shift that should be happening. The other piece is also true, which is the Trump actions and policies and announcements are helping China. You saw Canadian Prime Minister Mark Carney travel to Beijing, which is something that the Canadian Prime Minister has not done in a while, to have a trade deal with China.
Let's turn fully to India at the moment. When you were in India not too long ago, you said that India hasn't had a big demographic dividend. Even though the population is big, the workforce is big, labor is contributing only about 30% to growth. Are we saying, therefore, that this is India's opportunity, but you need to have faster pace of reforms? The Prime Minister says we're on a reform express. Do you see that reform express, or do we need to do much more?
I see a lot of important reforms. I think it's absolutely special what's happening, both in terms of physical infrastructure and roads, all of that, and also digital infrastructure. Those are very big. What was done in terms of implementing the labor law, which requires states to agree to that too, I think that's a good push. Though I don't know whether that's strong enough to get the kind of labor market flexibility you need to get a stronger action from labor, right? So we like to talk about the demographic dividend, but India's growth has been quite capital intensive because of all the restrictions on using labor and all the problems that exist with that. Simultaneously, in the skilling, human capital, those are not going to pay off instantly. It's going to take time. But that improving, raising that level of human capital will be important to make labor play a bigger part.
So risks and opportunities. If I were to ask you two risks and two opportunities that you see India having at the moment in this unsettled world.
I think in terms of risks, frankly, near term, external, which is coming from the geopolitics, and I would say weather and climate. Those shocks matter. It makes a lot of difference how good or bad the monsoon is in India even now for growth, because rural demand still depends quite critically on that. So I think those are important risks. In terms of opportunities, it's just reforms, keeping on the path of reforms, continuing to show that India is a good place to do business, making it easier to acquire land, transfer land titles, having clean land titles, judicial reforms. It's a big area that's been stuck for a long time. Those would help.
Yeah, I had a business leader come on the show and said it's not about the ease of doing business, but the speed of doing business that India needs. Very interestingly, the IMF, which you were a part till not too long ago, has given India C grade for its national accounts data. That created a bit of a stir. Whether India is using outdated base years, methodological weaknesses, discrepancies between GDP estimates. Where do you stand? When you look at those India numbers, 6%, 7%, do you go by them, or do you believe that they need to be further decoded in a way?
So when I was chief economist at the IMF, we used to ask ourselves this question all the time. And the truth is, for pretty much most emerging and developing countries of the world, they would get close to a C grade on their national account statistics because they don't have very good producer price indices, they don't do the right kind of double deflation that needs to be done, and so on. So, when you try to look at other kinds of high frequency data, and we didn't see any smoking gun evidence that there was something particularly bad about India's GDP numbers versus any other countries, right? It is tough, it's complicated.
Why give it a C grade then? You see, the moment the IMF gave it a C grade, there are now questions being raised, and they've been raised even before that, but when the IMF does it, then it gets additional ammunition that the data that is being thrown by the government lacks transparency, and therefore should we go by the headline GDP numbers or actually try and break it down into specific sectors?
So the grades are an absolute measure, not a relative measure. So my previous point was saying that most emerging markets find themselves in that bracket because they don't have the national statistics being done the way it can be done. That requires investment, and actually the IMF is working together with the Indian Statistics Office to improve on this kind of data collection. And there's an important round that's being done right now in terms of rebasing, which will help improve the quality of the statistics.
Because again, one of the concerns is how do you get private investment back on track in India? If India has got to go to the next level, despite all the incentives the government has given, private investment has been sluggish. It's been largely state-driven capital investment. Do you believe that's where the ease of doing business, of ensuring that there's a growing business confidence needs to be restored? Also a climate free of fear, if I may call it that, that businessmen need to believe that they will not be unfairly penalized for actions they take.
I do believe that the complications in terms of being able to do business, all of the areas where I said reforms were needed, including on land, are holding back private investment. And indeed, you want to be in a predictable environment when it comes to regulations, when it comes to government policies, and sometimes, you know, that has not been as predictable as it should be.
So global growth
Projected at 3.2% for the year that was.
The year that was?
The year that was
Is 3.2. Many believe it's going to be 2.3 for the year that goes ahead. Are you?
3.3 for the year.
Do you believe that 26, 27 will be will maintain 3.3%, or do you see a further slowing down?
Given what we know, I would say 3.3 is possible because for a lot of economies of the world, they're going to benefit from the rate cutting cycle, including in India, where interest rates have come down. There is fiscal stimulus in several countries that's coming in, including in the US, Germany, China. All of those work in favor of being able to maintain growth, including in terms of the AI spending space. But, you know, the risks are what we might see hear from the speech very soon. That could happen in about a half an hour from now, and whether we have another big eruption of tariff and trade wars across the major nations of the world, whether there's a trigger of inflation, because the risk, I don't think that's being priced into markets right now, is that inflation could be higher in the US than what's being expected, in which case the Fed would have to raise interest rates, and nobody's really expecting that.
one of the
Speeches that's being celebrated here in Davos is that of the Canadian Prime Minister, who seems to suggest that there's an opportunity here for the middle powers to assert themselves, to assert and focus on a rules-based world order, assert their sovereignty. Do you believe there's a model there for countries like India? Should we stand up in a way to America when they, we believe, unfairly impose tariffs on us, saying don't purchase Russian oil? Do you believe that countries need to, in a way, push back every time America imposes higher tariffs?
I believe that the middle powers are absolutely critical to holding up a rules-based order. They were critical to holding up the order that existed for 80 years. And why? Because it's totally in their interest, right? For an economy like Canada, it needs to grow by exporting and having economic relations with other countries. You're a small country, you cannot be entirely domestically dependent. Growth has come through exports, and that has to be the channel, which is why they've been so good about trying to enforce a rules-based order. You know, agree completely that you go with the coalition of the willing. And you see more and more of that. The European Union went and signed a trade deal with South America, the Mercosur deal, which was in play for multiple years and wasn't even signed. They're working on a trade deal with India.
which could be announced.
As early as next week.
Exactly. Mark Carney was in Canada. The Prime Minister of Canada went to Beijing. The Prime Minister of Canada has not gone to Beijing in a long time. So new alliances, however tentative, are being formed. And I think it's a sign of saying that, you know, it's a coalition of the willing. Who are the ones who want to keep continuing having predictability in the international order?
So if you had
One piece of advice for policymakers in India, particularly ahead of a union budget that comes in a fortnight, this time on a Sunday, what would that one piece of advice be? What would you say needs to be done in this unsettled multipolar, multi-aligned world that will give a sense of confidence that 2026 will be a year where India is on the right path?
Keeping the budget in mind, I would say that what India needs to continue delivering on, and it has done well over the last couple of years, is macroeconomic stability. Right?
Will that hold in this uncertain world?
It can, given India's structure of this economy, and thankfully because of the whole shift towards an inflation targeting regime, which has helped keep inflation expectations more anchored than it used to be, so that whenever the rupee depreciates, you're not seeing an immediate pass-through into inflation. All of that is good policy frameworks that have helped keep India's inflation low, somewhat insulated from outside developments. Similarly, on the fiscal front, maintaining fiscal discipline, which is happening at the center level, not so much at the states, which is a bit of a problem. Again, if you can keep that going, because there will be another crisis that's guaranteed, regardless of whether it's geopolitics or not, and being able to then support your economies, you need to have the buffers for it.
Very interesting that you mentioned the states, because many believe the reforms have to come in the state. Fiscal prudence tough for many states. And you've come out as a strong votary, I believe, of one nation, one poll. You actually went before, or you gave a written submission to a parliament committee where you said India needs one nation, one poll, because perhaps that's one reason for fiscal profligacy, all this freebie culture that we are seeing around us.
So I was invited by the parliamentary committee to share my views on the economic consequences of one nation, one election, not getting into the constitutional aspects or the political aspects. And yes, I think the evidence, both from studies inside India, but international evidence, all point to how costly it is in terms of the impact on GDP of having this high level of uncertainty, these constant elections, this constant desire to give, short-term freebies, as you would call it, I guess, as opposed to investing in investment.
There is a big debate, Professor Gopinath, in India of the difference between freebies and welfare measures.
Absolutely. Yeah, we should be careful about that. I do think there are important cash transfers of a certain kind that are absolutely valuable and have been shown to be effective. I am in support of it. But what we're seeing in India right now is every state government, there's a race to the bottom, and there's more and more of the state's budget being allocated to these transfers. And there's literally nothing to do for development, ultimately, which is in form of investment. So again, I do support certain kinds of cash transfers that have happened, but I feel it is on a bit of an unsustainable path.
It's interesting because while only today the Oxfam inequality report has come out here in Davos, and not for the first time, it suggests global inequalities are growing. Is that something, there is a belief that we're here surrounded by the elites, the political and business elites of the world, but people at the bottom are still struggling. There are still people recovering from COVID shocks, for example. Should we therefore be a little more tempered at times in the way we respond to some of these headline numbers that are thrown at us?
You mean in terms of the level of inequality?
In terms of the level of inequality, in terms of the fact that while the headline numbers look good, there are still genuine concerns at the bottom of the pyramid.
Absolutely. I think we all have to be concerned about whether it's just the headline GDP growth number is improving livelihoods across the spectrum and not just at the very top. What we do also see sometimes is that it does improve everybody, but at different rates, and that obviously raises inequality, and that's a challenge that's frankly only going to get worse with AI.
My final question to you, I asked you one piece of advice for the government of India. What would be your one piece of advice for the Trump administration? What would you tell Donald Trump needs to be done to make the world a slightly more settled place in 2026?
Well, I think firstly, I would just say that from an America First perspective, maintaining its relationships with its allies is absolutely critical.
Including India.
Including India, from a purely, even if you said I was thinking only about the economic benefit to America from it, that is the best part to take.
So in a way, you're saying that you're virtually urging President Trump to make a differentiation between friends and allies on one side and so-called enemies and adversaries on the other.
Just saying that for example, the biggest, largest trading partner, economic partner in terms of region for the US is the European Union. So anything that's going to cause a rupture in that relationship is going to have a negative consequence for America. The second thing is all the evidence we've seen on who's borne the cost of the tariffs in terms of who's paid for all of these tariffs. It's been American importers. 90% of the cost of the tariff was borne by American importers. It was not borne by the exporting country. It was borne by American importers. Some of that the firms have passed on to consumers, but to an important extent they've absorbed it.
Geeta,
If there were those listening to you in India, should they see, therefore, listening to you 2026 as a year where they've got to constantly be on the watch, looking at the headlines, what comes on Truth Social? Or will we be, you believe, in a better place if we come back here to Davos a year from now? Will Indians breathe better a year from now? And I'm not just talking about the air quality, but generally looking at their economic numbers. As I said, a lot of market turbulence is giving a sense of unsettled times. Is there a reassuring edge in 2026, or as your article said, which I said at the outset, only an illusion of stability?
The fact that we're living in incredibly uncertain times means that I really don't have an answer to that question about where we will be next year. I think what the lessons we've learned are, one is, don't take every announcement as consequential, because sometimes announcements are made and they get unwound. So, take a bit of a breather. That's one thing. But at the same time, be ready for, surprises. So if you're an investor, diversify. If you're a company, make sure your balance sheets are strong enough to bear any kind of a big turn in events.
okay.
And if you're just about average citizens, worried about what the future holds, we'll just press the pause button in a way and wait to see what Donald Trump does next. But appreciate you joining us, Geeta Gopinath, and giving us a broad overview of what lies ahead in these uncertain times. Thank you so much.
Thank you.